What if I told you that some of the biggest and best stocks on the ASX are trading at dirt cheap prices right now? These stocks have shown throughout history that they won't stay cheap for long, and you've probably got at least one of them in your portfolio. But is this now the right time to pounce? Well, we'll answer that and more. Backed by Australia's leading government-accredited share trading education and insights that are sought after by major media outlets Australia-wide. I'm Janine Cox, joined by Senior Analyst Pedro Vinales, and we are Wealth Within. Good evening.
Good evening, Janine. Great to be with you.
Yes, great to have you on the show again, Pedro. Thanks so much for joining us. All right, let's get straight into it. First up is Fortescue Metals. That's one of our favourites. You can see there on the chart, this is one of the world's lowest cost iron ore producers with strong cash flow and high dividends. Green energy investments provide long-term growth potential. Now, we can see that FMG has been setting up for weeks and now has broken out last week out of this consolidation and short-term correction that came back in March 2026 and has moved up really nicely and strongly. We've looked at this horizontal line across here. We can see that there's some resistance there, but it looks like Fortescue's got the volatility and support behind it to push through that and head higher. Pedro, what are your thoughts and where do you think it's likely to go to?
Yeah, I think that this is one of the cheaper ones out of the big cap miners. We've seen BHP and Rio really shoot off and really at blue sky at the moment, yet FMG has lagged. So I wanted to highlight here on the chart what usually happens, because when I overlay the price chart of BHP, you can see that BHP is really, like I said, has taken off quite strongly. If I move that down, it has now traded above those previous highs. It's in blue sky, yet FMG hasn't. So when we look for clues in the history of FMG and how they move together, you can see that they largely do move together. However, there's this period back here in 2016 where we saw BHP continue to rise, yet FMG lagged it. It actually was trading down while BHP was trading up. However, eventually it caught up and it ended up trading from that low, ended up trading around that 200%. So it does catch up over time as it's doing now. So BHP, it tracked it quite nicely. BHP has taken off. If I just take off BHP there and just focus on FMG solely, it has gone through a huge sideways consolidation. We've got those two levels there at around that $26 and on that lower band around that $14. It's trading up on that upper band. And I agree with you, Janine. The fact that it is trading around those $23, it looks like a breakout is about to happen. And if that does occur, we can see further upside, possibly, to new all-time highs, which would have it trading well above that $30. So great opportunity here, I think, for FMG.
Yeah, it's interesting because I actually thought that it was going to come back and test that low at around 1850 or thereabouts and potentially take that out. But since it's gone through, it's at the moment telling us otherwise, and I'd just like to see it continue above that this week. I'm not sure where it's at today, but it would be great to see it push through that level and keep going. But the next one we've got, this one's actually Goodman Group. Now, Goodman Group's also one of these major stocks that people follow all the time, a global leader in logistics and data centre property, benefiting from AI infrastructure and e-commerce growth, strong development pipeline and institutional backing position, positioning it well for future growth. So that's a really good property stock, a real estate stock, if people want to get into that. Before I get into this one any further, first of all, I just want to say that you've got to keep an eye on this book. If you haven't picked it up yet, now's the time to do it. Now, this is Dale's book, How to Beat the Managed Funds by 20%. This has actually saved a lot of people. In the last global financial crisis that occurred, people bought this book, and you get it free, just pay the postage. We had people coming in and shaking Dale's hand, thanking him for the book, because it actually saved their wealth from the fall that followed that, because they were buy and hold investors no more now that they've got that information. So if we just now go back to GMG and we have a look at how it's unfolded over time, Pedro, I'll get you to chime in a minute. But first of all, just looking at how the angle of that trajectory has changed. But the angle of the rise is not really a concern at the moment because it has already come back quite a way. We've seen a bit of a pullback into that low there at around $25, which is okay. So it's about 38% fall, which is not out of the question for this stock. It's typical of what it's done. The angle has increased, and I'll get you to chat about that, Pedro, in a moment, but it's looking like that level is holding and really quite strong for GMG.
Yeah, that level of rise, that gradient that GMG has been on since that low, really in 2009, has increased exponentially. So we've got that gradient of rise coming out of that GFC. And then now we can see that it has been seen a pivot recently from 2020 when COVID happened. And now it's respecting this more steeper gradient of rise. And look, I really like FMG. This is looking quite nice. And that AI infrastructure and e-commerce, two very strong sectors with good capitalized annual growth, coming up. Obviously, people are buying more stuff online, so there needs to be more stuff stored in warehouses. And AI infrastructure, we need to increase the amount of data centers, obviously, for that AI race. So two sectors that are not going anywhere, basically. So I'd like to see GMG buck that down momentum that it's happening at the moment. If you were a more conservative trader, you might want to wait for that break above that $32. Now on the weekly chart, there is some very strong support around that $24. Not sure if it's going to come back down to that $24. You might get another chance, but if not, there might be some resistance around that 34. But again, like I was saying, it needs to break that downward momentum. We can see that it did hit its head a couple of weeks ago around that. So I'd be looking for an opportunity soon because we can see what happens when FMG breaks those prior down momentums. It just goes on a nice sustained run where you can, pick up the dividends along the way as well.
All right, now, thank you for that, Pedro. Now it's time for our third stock, which, no surprises for this introduction, it's CBA. We talked about previously. Looking at the way that this stock has unfolded, it looks like now, given the way that it was sold off, almost a 10% fall last week to the close, I think, and it's come down to, it's at 159 or thereabouts. It fell all the way down to 151, 150.90, which actually shocked me as to how fast that sell-off happened. It's not a surprise in terms of the fact that AI and the big institutions are controlling our market to the degree that they are now, because in prior times, it was a lot of mum and dad investors. Now people are getting exposure to these sort of stocks through ETFs, which just hands over greater control to the big institutions. People have to think about their super as well, because these big stocks are obviously taking a significant position in people's superannuation funds. And if it's not just CBA's, reporting that's done this, if it's also the tax, the concerns about what's going on in our economy and the new budget that's been released and how that's going to impact banks going forward, we could see CBA come down to this at the angle of this sort of level around that 130 mark. But Pedro and I were talking earlier about CBA, and I guess the worst case scenario from a theoretical point of view is around this 110 for me, but I had never envisaged CBA coming back to that sort of level. I would have thought sort of worst case scenario might be that 130, 140. A nice pullback would be to that zone there before we get another opportunity to get in again. What do you think, Pedro?
Yeah, I mean, the biggest fall in CBA's history, when, let that sink in, when you think about how far CBA goes back, and even around the GFC, which was directly correlated to banks. It was a banking issue over in America. So I wanted to have a look at quickly what happened to CBA during this GFC. This is the high in 2007, and nowhere were the falls as much as 10%. It was a gradual fall. There was 2% around there. Then we had another 3%. So there was a lot of indication here that it was just a sustained downward momentum. And like you were saying before, Janine, I'm sure that reading that book, mentioning momentum and trend lines, how that would have saved a lot of people from that fall. You only need to apply a bit of a momentum to see that the momentum was changing on CBA. And look how much further it fell. There was a lot of sideways price action where you would have been locked in here if you thought that it was cheap around that $40. Well, you'd be thinking again, because it was going to get whole lot cheaper at $26. So just relating that to this period right now, it's not quite the same, but it just shows how volatile times have become to have CBA drop 10% on just something around, they might have missed earnings just by a little bit. That the market is not forgiving companies, very well, I would say. So if it does break below that level here at around that 140, 150, then we could see further downside, like you said, to around that 110. But this could be a nice opportunity to pick it up if it does bounce off that 150. It could just be going through a bit of a sideways consolidation, like we have seen here over in 2021, where it just traded sideways for about a couple of years. So interesting times for CBA. Good solid bank. It's the P ratio is looking nice. Good dividends. It could be an opportunity coming up.
Yeah, so watch out for CBA, potentially going to get a bit cheaper for you. If you haven't bought it yet, there are probably better opportunities to come. Now, if you want more hot stock tips, make sure you check out our video, Trump No Peace Deal, 3 ASX war stocks to buy ASAP.